Welcome back to Money Channel. I'm your host, Erin, and today I'm going to talk about Fundrise. So, Fundrise is a platform slash company where you can invest in real estate. So, like a REIT, okay? So, it's a REIT fund, but they're not exactly liquid. So, you have to hold on to it for several years, okay? So, we're going to take a deeper dive into my Fundrise fund, which I have with them. Okay. Please keep in mind, I'm not a financial advisor, so you must do your own due diligence. With that said, let's continue. So this is my fund. I invested $1,000 worth of this particular real estate fund. Unfortunately, I am negative $50. Okay. So it gives you the breakdown here. Contribution is $999. Then it says here dividend distribution. So we have here negative 3.43. So guys, my dividends are reinvested, okay? Then it says distributions reinvested 1.82. Okay, they do charge management fees, guys, so you have to keep that in mind. So it says here advisory fees is 3.40. Okay, then like I said, it depreciated by $50. It says here 53.58, but okay, whatever. So this is what I have. It's called the flagship real estate fund. And then 100% value $947.73. Net return annualized 2.1% negative. That means it's down. And then cumulative return 5.1%. So guys, once again, like I said in my 2 to 3 previous videos, all of this occurred for me during COVID time. So where were you going? Nowhere. What were you doing besides working online? Nothing. Okay, so it was perfect for me to try to go into alternative assets. Okay, at that time I didn't care if it was going to profit in the moment because I looked at long term. Okay, so pretty much just diversify, and then for me, I diversified and see what sticks, what doesn't. Okay, and then because most of my alternative assets are not liquid, I have to hold on to them for several years before I can actually sell or the company sells it. So continuing onward, it says here cost of shares owned, and that's $1,000.82. Quantity 80 or 80.071. Okay. Current NAV per share $11.83. Estimated value of shares owned $947.24. Unpaid dividends 0.51 cents. Unpaid advisory fees negative 0.02, and then total is $947.73. Dividend is $6.93. So and so on. Okay, guys. So let's get deeper into it. Let's click on fund details. Okay. So while we're waiting for the page to load, guys, I don't know why the page is so slow. Maybe I have too many tabs open, guys. So this is what I have. Okay. It says here once again, flagship real estate fund, and it says 4.5% annualized return since its inception, 1.2 billion net asset value NAV, 0.21% annualized distribution rate. Okay, I bought this particular fund, the flagship real estate fund, in like around January 8th, 2021. So I didn't want anything too risky. I think the flagship fund was pretty much like a balanced one, or slightly more conservative. So I was like, okay, let me just click this one, whatever, okay? Sometimes or most of the time, it's whatever fund is open at that moment, okay? And then you have to wait. So they would have like real estate one, or REIT one, sorry. Then they would have REIT two, then REIT three. It's whatever was available at that time. So here it says, just to give you detail, it says the flagship real estate fund is designed to deliver long-term appreciation from a diversified portfolio of our most favored real estate investment strategies. The fund primarily invests in real estate across the Sun Belt with a focus on build to rent BFR, single family home communities, multifamily, and industrial. So it breaks it down right here. It says asset type, build for rent is 67% of the portfolio. Industrial is 22%. Multifamily is 11.1%. Then it says here, strategy allocation, core plus, which is 40.4%. Value add is 39.6%. Opportunistic is 20.1%. So as I told you, the opportunistic is like high growth, okay? Core is more like safer. And then value, you want a little bit of growth, like a mutual, like a middle range, okay? So like I said, I wanted something less growth because I wasn't sure, since it was like COVID time, what's going to happen with housing. Our people were losing their jobs, and so it was crazy. So I was like, okay, maybe I should just have a more balanced approach, okay? So within the fund, that's the allocation type. So it says here the management fee is 0.85%. That is high, I'm not gonna lie, but like I said, I wanted to try this out, okay? And then it tells you a hypothetical growth of $10,000 invested. So it says here the hypothetical growth of $10,000 invested is $2,181. So and then they have these particular real estate or houses inside. So there's Dorchester Commerce Center in South Carolina. There's High Point Commerce Center in Largo, Florida. There's Highland Townhomes in North Charleston, South Carolina. What about this one? 215 Interchange in Las Vegas, Nevada. What about this one? Cotton Vale Towns in Savannah, Georgia. That looks cute, guys. Come on now. Then there's this one, Main Street Towns at Lilburn in Lilburn, Georgia. That looks cute. There's this one, Simon's Trace in Kissimmee, Florida. Guys, oh, look at this one. So this is exactly what I did, guys, okay? During COVID time, I was actually looking at what type of houses, and I was actually clicking on the pictures, just like I'm showing you now. Pine Ridge Place, Fountain Inn, South Carolina. Build for rent, value add, flagship real estate fund. See, this is what I was telling you about. Growth, E-REIT, and then 7. So like whatever was available at that time. So they will say, okay, in 3 months, this REIT will be available. In 4 months, this REIT will be available. In 1 month, this REIT will be available. Each REIT had a different name, whether it was REIT 1 or Growth 2 or Core 3. It had different names. And then it shows you like a map, and it gives you more information. So, would I do this again? I'm actually not sure, guys, to be quite honest, because, you know, I don't see any growth from 2021 when I bought it until now, which is 2025. So I don't know if I would do this again. Maybe not, but just keep in mind it is a low barrier to entry when you're trying to purchase real estate. Let's say you don't have money to purchase real estate, then yes, this would be one of the ways to go about that, okay? But I'm not liking that I'm not seeing any real profit and it's been 4 years later. So again, and this is not liquid, so you do have to wait several years. Being that it's a liquid asset, as I said in my previous video with my other illiquid assets, you have to be in a strong financial position. You can't just like need the money under duress, okay? If we have a financial crisis, if you lose your job, if we have a global recession or a recession in the US, you have to act like that doesn't exist. This Fundrise fund I have, the real estate, like the REIT, I should say, it doesn't exist. I act like it doesn't exist because it really does not exist to me. I can't just pull money out of it. I can't just say, oh, I need the money now. I need the money next week. I need the money in 1 month. No, I can't do that. So therefore, this itself does not exist. You have to act like it's throwaway money. For example, a lot of people have bad habits. They're like, oh, I'm gonna spend $1,000 on a purse. I'm gonna spend. Some people want to save up money and spend. I don't know. It's crazy. They want to buy like a $5,000 purse. Okay, like whether it's Gucci or I don't know, Versace or whatever. Okay. Others say, oh yeah, I'm gonna buy this gaming system, or I'm gonna buy the latest, I don't know, like 5 pairs of tennis shoes or sneakers. I don't know, guys. We are a consumerism culture, but if you stop consuming, or if you limit your consumption, and put a percentage to work and just see, like I said to my friend, what is your worst habit that you spend money on? And he said, pretty much like a pack of cigarettes and alcohol every 2 weeks. I said, or every week. I said, okay, cut the alcohol out and limit to your pack of cigarettes and see how much you can save. With that money, you can easily buy a few dollars worth of like Bitcoin, okay, or Satoshis as it's called, or something else, okay, because he's kind of like hesitant to dabble into crypto, but would like to, but it's just he's a bit, like I said, ambivalent in the fact that he is like, I don't know, it could go up and it could go down and I could lose money. And I'm like, okay, just experiment and put 20. Okay. With $20, like you could just break one habit temporarily and tell yourself, I'm not going to buy a thing of whiskey. I'm not going to buy a thing of wine, or I'm not going to buy like a pack of cigarettes this week. And then just do that. This, however, it's the same idea, but with more money. Okay. So you're going to have to say, like, oh, I'm not going to go clubbing every weekend. I'm not going to spend $100 to $150 on dinner every 2 weeks. I'm not going to go party at this expensive club slash rooftop, I don't know, okay, rooftop bar, whatever, pool lounge nonsense. At least 1 month where you just chill. Then, yes, it's possible. But again, would I recommend this? For now, I'm gonna say no, because and this is just my personal opinion. Again, I've been in this for 4 years, and I'm not seeing a return on profit, and it's been 4 years. That means no. Some people, if they're patient enough and they're willing to wait the game, sure. But if you're not willing to wait the game, don't get in it. That's just my take. Well, that's what I have to say, guys. If you like what I have to say, or if you like my channel, please subscribe, and I'll catch you later. Ciao, guys.